The dollar has lost 98% of its purchasing power since 1913, while gold has increased 8,000%. But that's just one reason smart investors are moving into gold right now. Stay with me for the next 10 minutes, and I'll show you why 2025 could be gold's breakout year. Welcome back to another Straight Talking episode. I'm the Diversify Guy. I've been calling it like I see it for years now. While traditional finance advice remains largely unchanged, I'm sharing information about alternative investment options that you might not know exist. Remember, do your own research. I'm not a financial advisor, just an enthusiast, so always consult with a financial professional before making investment decisions. Today, I'm going to share 10 eye-opening reasons why gold deserves a place in your portfolio in 2025. Let's start with reason number 10. Gold is remarkably easy to access, store, and sell. Unlike other assets that require complex paperwork or specialized knowledge, gold is straightforward. You can buy it today and sell it tomorrow if needed. It's highly liquid with a global market that never sleeps. And unlike oil or other commodities, gold doesn't degrade or corrode. It has an infinite shelf life without requiring special storage conditions. Whether you're storing a few coins in a home safe or larger amounts in a secure vault, gold gives you physical control over your wealth, and that control translates directly into competence, something that's increasingly rare in today's financial world. Reason number 9. Gold is a tangible asset that's easy to pass down through generations. In an age where most wealth exists as digital numbers on a screen, there's something powerful about holding physical wealth in your hands. Gold can be stored as bullion, coins, bars, or even jewelry. Here's what most financial advisors won't tell you. When you buy a gold ETF, you don't actually own any gold. You own a paper certificate that says you're entitled to gold. If there's ever a problem with the company behind that ETF, good luck getting your gold. Physical gold, on the other hand, can be gifted directly to family members. Many have created generational wealth with physical precious metals, completely outside the traditional financial system. Reason number 8. Gold functions as a global currency that's not tied to any specific government. This is crucial. When you hold dollars, you're at the mercy of Federal Reserve policy. When you hold euros, you're betting on the European Central Bank. But gold is accepted everywhere, regardless of political borders. Gold has served as a medium of exchange for thousands of years across every civilization. Why? Because it's abundant enough to create coins, but rare enough that not everyone can produce them. Its value isn't determined by government decree, but by the free market. And in a world of increasing currency wars and devaluations, that independence is more valuable than ever. Reason number 7. Gold is a time-tested asset with genuine intrinsic value. Unlike fiat currencies that can be printed endlessly, gold has real physical properties that make it valuable. It doesn't corrode or tarnish. It has very low reactivity to other elements. It's non-toxic and safe to handle. It's scarce. All the gold ever minted would fit in about 3.5 Olympic swimming pools. Has a relatively low melting point, making it easy to form into coins or jewelry. It's an excellent conductor of electricity, essential for electronics, and it has that unique, unmistakable color that never fades. These properties have made gold valuable across every culture and time period in human history. That's not something you could say about any paper currency. Reason number 6. Gold typically performs well during periods of economic uncertainty. Look at almost any major economic crisis: the 2008 financial meltdown, the COVID crash, the 1970s stagflation. Gold has served as a reliable safe haven. When traditional markets get volatile, investors flock to gold's stability. This happens because gold isn't tied to the performance of any particular economy or company. While stocks represent claims on future corporate earnings that can disappear during recessions, gold remains gold, regardless of economic condition. For retirement savers especially, having an asset that potentially zigs when the market zags provides crucial protection against worst-case scenarios. Reason number 5. Gold is largely inflation-proof. This is huge. Inflation is currently at a 40-year high, hovering around 7.5%. At that rate, $500,000 in savings today would have the purchasing power of less than $250,000 in just 10 years. Gold provides protection because it's a finite resource. We can't print more of it. When central banks create trillions in a new currency like they've done since 2008, each dollar becomes worth less, but gold typically maintains or increases its purchasing power. During the inflationary 1970s, gold rose from $35 to over $850 per ounce, a 2,300% increase. While past performance doesn't guarantee future results, gold's inflation-fighting properties are backed by centuries of economic history. Reason number 4. Gold often moves inversely to the stock market. This negative correlation is one of gold's most valuable features for portfolio construction. When stocks tank, gold frequently rises, or at least falls less dramatically. This relationship exists because when investors lose confidence in financial assets, basic the security of physical assets, gold becomes the financial equivalent of high ground during a flood. The practical benefit? Adding gold to a stock-heavy portfolio can potentially reduce overall volatility and improve risk-adjusted returns. Even a 10 to 15% allocation can make a meaningful difference in portfolio stability. Reason number 3. Gold offers financial privacy in an increasingly surveillance-heavy world. Here's something most advisors won't discuss. 86% of global central banks are developing their own digital currency. The Fed, China, and Europe are all racing towards fully digital money systems. While convenient, these systems would give governments unprecedented visibility into your financial life. Every purchase, every transaction potentially subject to monitoring or control. Physical gold, properly acquired, exists outside the surveillance architecture. For those concerned about financial privacy or potential government overreach, gold provides a time-tested alternative store of value that doesn't require anyone's permission to own or use. Reason number 2. Gold provides true diversification for your portfolio. Most people think they're diversified because they own different stocks or stock funds. But during market crashes, these supposedly different investments often plummet together. True diversification means owning assets that respond to different economic forces. Gold has maintained its own unique price patterns, often completely disconnected from stocks, bonds, and real estate. Over the past 50 years, gold has delivered returns comparable to the S&P 500, but with different timing, performing best exactly when traditional investments struggled most. That complementary performance pattern makes gold an ideal diversification tool. And finally, reason number 1. Gold serves as the ultimate hedge against inflation and currency devaluation. The economic conditions we're experiencing now are eerily similar to the 1970s. High inflation, government spending, money printing, and blooming national debt. Back then, gold delivered returns that far outpaced inflation. Consider these pressures on the dollar today. Inflation running at 7.5%, the highest in 40 years. The Federal Reserve expanding its balance sheet from $870 billion to $8.5 trillion in just 15 years. National debt exceeding $30 trillion for the first time in history. The money supply growing by 36% in just 20 months. These aren't partisan talking points. These are mathematical realities that every investor needs to consider. Many leading economists suggest inflation could remain elevated for years to come. The good news? There's still time to position your portfolio accordingly. Even a modest allocation to physical gold could potentially offset some of the harmful effects of these powerful economic forces. So how can you actually invest in gold? You have several options. Physical gold. Coins and bullion purchased from reputable dealers. Coins like American Eagles or Canadian Maple Leafs are government minted and highly liquid. Gold IRAs, allowing you to hold physical gold in a tax-advantaged retirement account. This requires a specialized custodian who handles the storage and paperwork. Gold ETFs, offering exposure to gold prices without owning physical metal. These are convenient but don't provide the same benefits as physical ownership. Gold mining stocks, companies that extract and produce gold. These can offer leverage to gold prices but come with additional business risk. The right approach depends on your specific goals, tax situation, and risk tolerance. Gold isn't just a relic from the past. It's a crucial financial tool for the uncertain future we're heading into. Whether you're concerned about inflation, market volatility, privacy, or simply want better diversification, gold deserves serious consideration in today's environment. If you found this information valuable, do me a quick favor, hit that like button and subscribe to the channel. It helps more people discover this kind of straight-talking financial education. I've also created a free guide called the 5-Minute Precious Metals IRA Checklist that dives deeper into how you can add physical gold to your retirement account. You'll find the link in the description below. Until next time, this is the Diversify Guy helping you protect what you've worked so hard to build.